Good morning, everyone. It's Wednesday, 6:30 a.m., June 10th, and I'm going to do your crypto and Bitcoin review for the market. So let's get to it, all right? So the first thing I want to go over is the headlines that you see right here on XPT. The one interesting headline piece that I noticed was the Bitcoin Millionaires Club is growing again with the number of addresses holding more than 100 Bitcoin is down since March. It's starting to pick back up again as Bitcoin nears 10,000. So this has been happening for a little while. Not really the biggest news. I thought this was kind of interesting too. You know, when will Bitcoin make a decisive move? The reason why I think that is a piece that's being put up is because it tells you about the impatience and what's on people's minds. I think what's on people's minds right now is they're bored to death. They're tired of this range movement right here. They're tired of this larger, triangle or potential sideways ranging, tightening, coiling, whatever you want to call it. Bitcoin is just not as volatile as people want it to be, especially to the upside. And when people get bored, you see articles like that. You see people talking on Twitter, oh, it's going to break 10,000 and 10,600, all that jazz. Point is, Bitcoin can stay in a range for as long as it wants. And I think this is a good thing that more and more people are getting bored, because it just goes to show how impatient the average crypto crowd is. Sometimes moves like this in other assets take a long period of time. Sometimes they range, coil up, consolidate, and then they make their breakout move when people least expect it. And I'm kind of thinking that because Bitcoin is a little bit more tied to the equity markets, I figure it consolidates here more until the equity markets start to figure out what the heck they want to do. Do they want to keep pressing out further? And it's possible that Bitcoin just stays here in a range. Because since, I think, beginning of May, Bitcoin has pretty much stayed in this range right here. A better way to draw it is kind of like this, right? So let's do this, okay? The range that we want to draw is maybe, we could draw it kind of like this. This is the high of the range right there. And then we can draw it down, possibly this being the bottom. Okay, so this is the bottom of the range. This is the top. Let me get that a little bit more perfectly right there. And so we're in the upper half of the range, right? It's a positive sign. But now we're kind of creating this descending parallel channel right here. Not a perfect one because we got to touch top, bottom, top, or are we going to get a fourth bottom touch down here? Again, I've personally talked about why I personally believe Bitcoin will go down. So by the end of today's video, I'm going to tell you guys about some of the volume divergence I'm seeing. I'll give you guys a general Bitcoin market overview. And then yesterday, I forgot to mention the altcoins that I was watching, but I'll talk about those today as well, okay? So hopefully by the end of this video, you know all three. So first things first, on the basic technical level, what we're looking at is this descending parallel channel. Even if it's not a descending parallel channel, you still have this descending trend line right there. With this descending trend line that Bitcoin is hitting right now, if you cannot break it or break through it, you're probably going to head down a little bit further, maybe towards this EQ area, which is this dash trend line coming down like this, which intersects with this sideways horizontal 50% EQ of this larger range. So that'd be pretty good. We could hit it over the next, I don't know, half a day or so, and that would get us to about $91 or $9,200, somewhere around here. Not necessary that we have to do that, but just an indication of, if it does drop, that could be the area that it might drop to. Now let's go to the order book data, the L2 data. Now, I've spoken about Trading Light before. The one thing you need to pay attention to about Trading Light is, number one, it can be a little bit complicated and daunting at first. But like all things, right? You have to give it time and energy and effort to understand what is going on in the market. And so for the most part, what I can tell you in a brief 2-minute rundown is if we look at the market right now, okay, you see these three candles right here, and this is the 4-hour time frame, okay? You can see some big sells coming up right there, these yellow blocks, $9 and $10 million. Typically, when you see these stepping up, they're trying to push the price down. Whether it's by passive orders or whether they're actively selling, they're sort of indicating to the market that, hey, don't even think about coming up here, or else you'll get slammed down with orders. And so the other bots and the other algos react appropriately where, they may start selling off, or there's a, pressure on the price in general from other sellers. Now, the interesting thing about all this is if you zoom out a little bit, right, there's some pretty decent buys way the heck down here. You see all these yellow sparse buy orders down here. These are around $7,300, $7,400, all the way to about $6,700. That is, I guess you call it plunge protection, whatever, but it's clearly indicating that, if price comes down to that level, there's a good amount of buyers left down here. However, if you look where we are right now, okay, it's really not a good amount of buyers set up. In fact, there's more sell pressure that's coming out at present moment. If you know anything about cumulative volume delta, which is this indicator right here, CVD, this is a pretty big divergence, CVD divergence. So basically what you have here is something like this. You have pretty much a lower high in price, and then you have this climb here in CVD. The only thing that you need to know about CVD, if you've never heard that term before, is it is the net volume aggressiveness of buyers or sellers. Okay? So if the CVD is positive and uptrending in green like this, that means there's, more buys coming in. If it's more negative and red like this, it's more sells coming in. Now, why is that important? Well, if you look at price creating this lower high, and even if you look at from here all the way up, right? So let's do that from here when we had this big drop. So let's do it kind of like this. We haven't really, you can see right there from this big drop, you can see the CVD has kind of climbed up pretty aggressively, yet price has really not gone anywhere. If you really think about it, price has kind of been capped right around here, right? It's just hitting this wall. Every time it hits this wall right here, this trend line sells off. It's up here, sells off a little bit. It's up here, sells off a little bit. Again, coming to that same area, sells off. Why is that important? Well, cumulative volume delta is telling you right now that, hey, there are buys coming in, but the price is not moving anywhere. That means there's some big sellers in the market. The sellers are allowing the price to be guided up here, and every time it comes up here, they sell. Because the buyers are buying and buying, but the price is not budging. So this is a bearish cumulative volume delta divergence. Because you see the buys pushing in right there, but the price is not doing anything. Bad sign, okay? So for the many reasons I've spoken about before, for being bearish, this is another one, right? This is a multi-day CVD divergence. This is from basically, actually, you can even take it from this top, June 1st. So we're about 8 or 9 days in. 9 days of CVD divergence, okay? It could go on longer, it doesn't matter. But, even if you zoom out, all right, you can see right here, price has kind of still stayed in this range, okay? Yet the CVD has kind of grinded back up, all right? But it doesn't make any sense because price is not moving anywhere. So this to me is a bearish sign of what's happening, where every time price comes to the tops of these ranges, it gets sold off because there's some big sellers in the market, okay? Trading Light is a software that you do have to pay for. So if you are curious, you can always message us in the Advantage side. I'll be happy to look at it and provide the information, whatever you guys want to see. But for the most part, you know, with our Advantage community, I have subscriptions to all these things. So most other people don't need to ask, or rather get the subscriptions. You know, if you just ask me to look at it, I'll happily look at it. Let's see here. So let's go back to the market, right? So what we have right now is the 4-hour pivot right here. Currently around 96.10. If we break that, you know, we could see that S1 coming pretty fast, like I've said before, okay? But the argument here is if we're holding this, we could push up towards the R1 too, technically. Though I think it's a little bit harder to push up to the R1 because I think there's significant amount of resistance in the way from the multi-month perspective, right? Because you have this going back from way the heck back here around September or so, October, February, and then even over here in May or June. So I don't know if it's that easy for us to make the argument that we're going to push up from here. If we do, on a daily perspective, we might push up to that R1, which is around 10,300. I don't know if that's likely. I'd probably say that at best, we probably get towards this area, which is around 10,100 or so. Because if you look over here, we had a bit of a consolidation, which was never, you know, price didn't come into that area, tested as resistance or anything. This is an unchecked area, right? I would say at best, we kind of maybe pop up there and then start rolling down. If we just start rolling over from here, I would probably say that's best. And, you know, then we start our descent down, at least towards this EQ around 9,200 or possibly lower, okay? Let me see here. So what else do we need to talk about? I don't really see anything special in the OBV as well. You know, I've talked about the 4-hour OBV still kind of rolling over to the downside. And you could see, you know, like the price is kind of consolidating right here, yet the OBV's not really doing anything. It's kind of just, you know, doing this kind of thing. You can see it right there, slowly rolling over. Now, I've talked about this before. This is the on-balance volume. This helps you understand exactly who is coming into the system and actually buying and willing to drive up the price. Not really that many people or, you know, big players coming in. All right. On the Bitfinex chart, you know, I think what's interesting about this chart is, as I've stated before, at the top of the range, you typically see the volume come in, right? And that's not good volume. It's bad volume, like the sell side volume. Now you can make the argument that, all right, well, you know, even with this sell side volume right here, high spikes in volume right there, high spikes in volume right there, high spikes in volume right there, the price is continuously put in these kinds of higher lows. I can't disagree with that. However, I think there are other signs that are showing us that even though with these higher lows, it's not really doing anything for the price. I mean, yes, the best argument you can make is we're only consolidating and the move hasn't been made yet. I agree. I mean, there's no definitive move to the up or downside made yet. But I would probably make the argument that there's multiple trend lines that have been broken to the upside where we can make the argument that, you know, the bullish momentum is being chipped away. It's just not visible to most people because most people are not paying attention to the smaller signs, the finite and minute signs that are in the market. And for example, even yesterday's daily candle was a nice hanging man candle. And as I've said before, the hanging man's kind of at the top of moves like this tend to signal, you know, a bit more of a reversal. It's possible we do that, okay? Not necessary, but let's see, you know, how today's daily candle closes. What you want to see, okay, if you really want to get clear signs of bearish movement down, is you want to see a daily close below this marker. And you're probably wondering why below that marker. Well, if you look over here in the cluster of candles right here, before we made that big push up, you want to see price taking out all these buyers and buyers from these candles right here. Okay, and that will happen when you have a definitive daily close below that marker. Until then, we could even spike down here, get a wick, and then push back up the next day. But a daily confirmed candle with high volume close below this marker will indicate two things. Number one, we close below a key level as per the candle closes, and we close below the monthly open. Remember, the monthly open is right now around 94.45. These are important levels to watch, okay? So that's kind of what I'm thinking is, the line in the sand, in my opinion, for bulls or bears is definitely drawn, at least right there at 94.25 or 94.45, depending on which market you're looking at or which exchange. And then the line above for more bullish upside is very clear, right? 10,600 or so, way the heck up here. Above that, we're bullish, all the way to 12 or 13,000. Let's take a look at some of the trades that I talked about. All right, so in the altcoin space, so again, this is our community right here. If you're not familiar with it, we have a 50% discount off. It's in the YouTube description below, so check that out. And let me know if you're interested in joining. And we also have a 7 days free given with our technical analysis course. Again, the link is below. And if you like our community, just hit the thumbs up, hit subscribe to our channel, and you will get more of this information on a daily basis. All right. So let me check out something that I posted a couple of days back or a couple of weeks ago. So here's two different trades that I mentioned. So this one was mentioned, let me see, around May 23rd. Okay. So you can see this was IOTA BTC. So let's check that out, right? So this was IOTA BTC. I think I mentioned it right there. You can see from there, it's already climbed up about 18 or 19%. Way the heck up here. I drew out this chart and I told my Advantage members about it. I said that it looks like we're holding a key marker on the daily time frame way up here. And so if this holds, again, it's a possible target way the heck up here. All right, 28.13 or so. If that holds and breaks, we're going to go all the way to the upside around 35.15, which is about a 60% gain. And again, you can see I posted this right around that candle right there, right? So that's May 23rd. So far, Advantage members have reaped 19%. Then Maker, this was another one that I posted. This was right around the end of June. I think, let me check out Maker. I don't know exactly when I posted that, but let me check it out. Well, so that was around this candle right here. So I said that, right around this candle, looks like we broke through consolidation, and I'm expecting at least more upside towards 620. That's pretty much what we got. As you can see, we broke through 620, went all the way to 720. So again, from basically this candle close to this up here, that's another 26% gain. Obviously, we missed this whole thing right here, but that's okay. There's a reason why we define our targets the way they are. Once you get to your target, you take profit. After that, everything else is just house money, right? So in either case, these are two targets that I mentioned to our Advantage members weeks ago, and you can see that they've done tremendously well, right? Obviously, yesterday Maker broke through significantly. So this is the kind of information that you get, whether it's altcoins or Bitcoin analysis. Here's the equity side, myself and Fassel are in some pretty great trades. I got this Beyond Meat July 2nd option call. I think I'm up about 98% on this, so a little bit higher. The SLB, which is Schlumberger, a oil field production company, I'm up about 280% on that. And then Beyond Meat, the stock itself, I'm up about 7% on that. So those trades are going really well. So we trade pretty much all markets. Fassel and I have been doing this for a while. We love trading markets. We depend on it. Our income depends on it. I've been trading for about 11 years. And the one thing that I'll tell you is it's a game of consistency. It's a game of resiliency. And you have to be able to have a game plan, understand how the markets work, understand what markets you're trading in and out of. If you don't, you're going to get wiped. If you think it's easy to make money in markets like this, don't even think about it, because there's a reason why majority of participants who enter the market lose all their money. We have the 90-90-90 rule, which is 90% of people lose 90% of their money in less than 90 days. It's just how it works. People get greedy. They don't know how to size up properly. They don't know when to take profits. They don't know when to obey their stops and their game plan. So, this is where we come in, right? We provide information like this of how we're trading in the market, and you could follow. Not financial advice. You're just following what we're doing, right? I'm not telling anyone to buy or sell, short or long. I'm showing you guys exactly how I make money in this market. Okay. So same thing on the FX side, right? So the FX markets, I've been looking to long this thing, the euro dollar, okay? Long it on pullbacks, long it on at least a breakout or something. Haven't quite seen a breakout. I missed a pullback right here, but now I'm going to wait for the breakout, okay? It's not necessary that just because I missed one direction, I have to jump in because I'm, panicking, okay? So you have to understand, exactly what you're getting into in different markets, how you trade them, what data impacts them, right? How you size up, how you take profit, where to take profit. All information that we provide in our community, okay? Same thing with education, right? I mean, when it comes to trading light, I always explain to my members exactly what we're seeing in the market, how to look at the data. Members always ask me about, how does a TD sequential work, right? So let's go to that. Let's go to the weekly, right? So we can turn on the TD sequential. It's very simple, okay? Tom DeMark created this indicator. It's called the TD sequential. So, Tom DeMark, TD. He mentioned that he went through about 70 years or so of data, of market data in the stock market. And he came to a couple of conclusions, which is markets have a tendency to find exhaustion typically around the 9 or 13 mark in terms of movements up or down. Okay, and again, I'm just summarizing this. These are not his exact words. This is how I understand the indicator based on his explanation. So the markets find, these demarcations, right, which is the 9s or the 13s like that, and to the upside or the downside. And when you get those, indicators at the top with a green 9 or a red 9 or, green 13 or a red 13, it's time to be cautious because the trend might be exhausted. Just like you're seeing right here for the past several weeks, we see the 9 at the high right there, okay? And so if this 9 is at the high, we might see after 9 candles up, a 1 to 4 candle pullback, possibly even more. But I think Tom DeMark specifically mentions that it's maybe a 1 to 4 candle pullback, okay? So you have to understand, that this doesn't mean that every time you get a 9, you should sell. I mean, that is a strategy, but it doesn't mean it's going to work all the time, because as you can see right here, after 13 candles, we went up more. It happens, okay? Even on the daily time frame, sometimes it's useful, sometimes it's not. So you can see right here, even up here, we went to the 13 right there and climbed for another 3 candles, right? It happens. Over here, which was a pretty perfect, bottom on the 13, right there. And then over here, even bottom on the 9, and then the 1 pushes up. So sometimes it works where you can simply just say, all right, well, here's a 9 reversal or, 12 or 13 top, and it might work. Even in this high around 13,900 or so that we had last June, you can see this was, I think, candle 14 or 15 up here, right? So not too far off. Even over here when we dumped in September, 9, 10, 11, 12, right there. I think 11 was the lowest one, but we still had, 13 bottom. So you could pay attention to this stuff in a way where you understand that, all right, well, if we're at 9s or 13s, it means there's some exhaustion of the trend. That's all it is. Exhaustion and potential reversal. It's a very important indicator, and I know a lot of smart people in the stock market follow it. So you may want to pay attention and throw this on. It's free. You could just type in TD sequential. I use the TD DC13. It was developed by my friend James. This one counts the 13 candles as well. So make sure you check it out. Use this properly. But anyway, point is, I showed you guys on the weekly, we already hit that 9, TD9. That means there's exhaustion up here. Doesn't mean we have to dump straight away, but we're coming to that point where, holy crap, we've just been going straight up. Are we going to pull back 1 to 4 candles? Or are we going to start dumping? Or are we going to start pushing up? We'll see. No confirmation yet. Right? I told you guys the level to watch, that 9,400-ish area. That breaks, we're probably going down to about 8,800 or 8,700 at least. At least. You know, I'd probably say if 88, 8,700 breaks, we're probably going down to at least $7,600. Okay? Even in the Ichimoku cloud, you can see weekly time frame, price trying to pierce the cloud, right? Doing its best, not able to break it yet. So we'll see how, you know, the next week or so goes. But it's holding this Kijun line right here, which is the red line right here. Pretty good sign. You know, that's around $8,700. That holds, hey, we could push back up into the cloud again. It's quite possible. Okay. So these are things you want to pay attention to. All right. You know, whether you want to use indicators, just, you know, basic understanding of how the market works. But more importantly, the best piece of advice I could give you guys is understand how to manage your risk. I see too often people coming into the market asking about how do I long or short, you know, with leverage, where do I put my stop, do this or that. It's if you don't know how to do these things, you probably shouldn't even be trading. You should more or less be looking at the larger time frame of investing, buying on pullbacks on the way down with dollar cost averaging, selling on the way up. Now, I think the problem is that people get greedy all the time and they want the you know, highest amount of profit or the least amount of losses. Just not possible. Okay. Unless you're just a godlike trader, it's just not going to happen. Even some of the best traders, they have like a 40, 45% strike rate, meaning that 40 to 45% of those trades actually go right. So good luck, you know. I mean, after 11 years, I could tell you that when it comes to trading, the only thing I care about is how often and how much profit can I make on a day-to-day basis. That's it. I just have to be profitable. Day to day, week to week, month to month, year to year. That's it. Doesn't matter how much significant profit I make, whether it's 100K or $1 million. Of course, I would love to have it to be $1 million every month or every year, but sometimes it's not possible. Sometimes all you need to do is protect your capital, because a market is a mechanism that is doing its best to transfer that wealth from your hands into the hands of the professional or the algo. That's just how it works. That's the game. Okay, and if you don't like it, you better step away. But in our community, we show you guys exactly how we trade every single day. Right? We've held this position for beyond for the last 2 or 3 days. SLB, I announced last week. Right? So SLB, I announced June 4th. I'm still in that position. You know, took off 110% the other day. SLB, another one, had another 320%. So you can see, even in the stock market, we have really smart people like Faisal joining us every single day. Okay? He updates us on the market every single day of how he's seeing the stock market. So you get a broader understanding of what's happening in the equities market, so you understand what's happening in crypto. And then on top of that, we invite a guest speaker every single Sunday, so our Advantage members could talk to him. His name is Austin Ashraf. He's a former Citi portfolio manager. He currently runs a hedge fund in the outskirts of Houston. Every single Sunday he comes on and he says, this is what I'm seeing in the market. This is how I'm changing my positioning. Here's what I'm long on. Here's what I'm short on. You get all that right now for 50% discount if you're interested. All right. But you guys know my analysis, you've been watching me for a while. I hope you enjoy my content. Do give me a thumbs up. Leave me a comment of your thoughts on, what you think the price of Bitcoin will be, let's just say by the end of the month, right? I want to hear from you guys. And also let me know if you guys are familiar with Trading Light. If not, just come join the free Discord link below, right? There's a free Discord link below. You don't have to join the paid side necessarily, but you could just hang out on the free side right here, community discussion. And oftentimes, I'll put out my analysis there, sometimes some free trades, or just some good conversation with myself or Faisal, where you can ask us questions. All right, that's it, guys. You'll take care. Cheers.